August 28th, 2024. As a reminder to everybody, again, tomorrow there will be no end of day review and no trading video. And there will just be something on second leg traps that I made earlier this week that will be posted. I'm just going to change my study on my personal screen real quick. Okay. All right. So you can see we're basically opening within yesterday's trading range. We had a small gap down basically to the bottom of the range, and now we're getting a bull bar in the middle of it. So I think really no rush to do anything right now on the open. We're really just in the middle of this big trading range. So to me, I mentioned yesterday that we're kind of forming some sort of breakout mode pattern. You can see we're getting these lower highs. If you mark this as an overshoot, you'd say we're getting all these lower highs, we're getting all these higher lows, something along those lines. So there is some sort of triangle forming. So we had an expanding triangle forming here. And I mentioned that a lot of traders would call this the diamond pattern. I just look at it as an expanding triangle and then a contracting triangle. And it's not the clearest pattern on this chart, but I think it definitely is there. So really what it is it's breakout mode, and it's the market deciding what it's going to do with this tight trading range that we're in. Are we going to get a breakout above and go far above for the bulls and go to a new all-time high? Or is the breakout above going to fail and we're going to get a reversal back down? In general, when you're in breakout mode, the odds are pretty neutral. So not really worth doing anything on the daily chart until you start to see a breakout. We're probably always in long on the daily chart. But anyways, so what am I looking for here? Well, if we go up, I'm looking for, sorry, let me just get this a little bit. I would like to see either the first bar of the day or the first couple bars rally and then some sort of micro double top, or if we sell off, get some sort of micro double bottom. Maybe if we do sell off, we'll get some sort of double bottom around this area. Get some sort of double bottom around this area and possibly some kind of swing up. So we'll see what we get. But again, you can see here, we just tested yesterday's close and we're at the bottom of this trading range. It's possible the trading range is the bar 39 low and not the bar 67 or 77 low as it might appear to be. So I'll just let this bar close real quick. So, we have a bear reversal bar, bear bar closing relatively near its low. It's not quite on its low. For the bears, they're hoping that the gap down was the start of the bear trend. So they're hoping this is the breakout below this trading range. The bulls are hoping that the breakout below the trading range is going to fail and we're going to get a reversal back up. Usually it's a little bit more likely that, any sort of breakout of a trading range is going to fail. And I don't think one is a particularly strong bar. So I do think it's a bit more likely that we go more sideways here rather than down, sideways to up rather than down. But we'll see what happens. What if two is a big outside up bar? I probably still would not buy it. I think you'd be buying a little bit too high. I'd still rather wait. I'm pretty neutral. I'm happy to buy or to sell. I don't have really too much of a bias coming into today as to what we would do or what I think we're gonna do. But I really want to. So like yesterday, if you watched my video from Monday I was a little bit more bearish, so I was more interested in selling. Yesterday morning I was very bullish, but just there's nothing really great for me to buy. And I don't have any particular feeling towards today. So today that tells me that it's probably going to be a trading range open. And that means I'm only willing to buy if I feel like I'm buying low enough in the potential trading range. And I'm only willing to sell if I feel like I'm selling high enough in the potential trading range. Again, we might be, I'm sure we can keep going. Well, we definitely can keep going sideways. And if we do keep going sideways, I'm sure that I can, I'll be able to redraw the triangle in a way that looks similar. So yes, the way that I drew it a few minutes ago made it look like we're at the apex, and we might be, but it's also possible that we just continue to go sideways. So remember, 50%, excuse me, 50% of all sell-offs on the open are going to end up being minor. Sorry, I just got a phone call. Actually, it just reminded me I had my phone on me. I try to keep my phone in a different room when I'm trading. It just doesn't, there's no real reason to have it. But anyways, well, for me personally at least. But anyways, bar two so far forming. The bears want a big bear bar closing near its low and the start of a bear trend. I think even if it is a big bear bar closing near its low, we're probably just looking for the bottom of the trading range, which might be, like I said, the 25 low, the 39 low, more so than the tight trading range we were just in. So we are breaking out below the tight trading range, but we'll see if it's a successful reversal. Probably still around a 20% chance that we have seen the high of the day so far. So as we can see, if you did take the sell below one, are you enthusiastic about how bar two looks? Probably not, right? To me, it looks a little bit more disappointing rather than anything. So we might end up getting, some sort of bull bar on bar three from bears buying back shorts. It obviously depends a little bit on how this bar closes. If it closes on its low, then that'll be a bit better for the bears, but I don't think it's going to. Okay, so we have that bar. Some bears will sell the close of two and hope that bar three is a big bear bar like 77 yesterday, thinking that we have consecutive bear bars and maybe we're going lower. But for the most part, I think bears are going to be disappointed in two and they're probably going to look to buy back shorts. However, there's probably sellers not too far above two, so you do have to keep that in mind. So stop order bears who sold below one who were really aggressive. That's a very aggressive trade, but there are some traders who did it and they either scalped out with a couple of points. What were they able to make? 2, 3 points? 3 points. So bears who sold below one were able to make 3 points, and they would have had to risk seven. So really not that great. You can see there's going to be sellers above two. So limit order bulls might be, or limit order bears are going to be stepping in as stop order bears are stepping aside. Now, if you sell above this, where's your stop? It's probably not here. You probably have to have a wider stop somewhere up here. Sell above, be willing to scale in, but I don't think it's really all that good. You can see it's possible we've seen the low of the day at this point, but it's not all that likely. If three is a huge bull bar closing near a high, it's probably okay to buy and just take a chance. We've seen the low of the day, but I think it's a bit better to wait for follow through. So bears are buying back shorts, probably a big piece of what's causing bar three. Some bulls who bought the low of the tight trading range. So we had a tight trading range yesterday from bar 49 to bar 77. And some of the bears who are buying, or sorry, some of the bulls who bought the breakout of the low during bar one didn't think bar one was a very strong bar. So they might have bought more during bar two. And those bulls are also adding to their positions. And that's part of what's causing this as well. If this closed on its high, it's honestly probably an okay buy to take a chance that we've seen the low of the day. It's definitely aggressive though. But it would need to be a perfect bar. The problem with it would be it's closing in the middle of yesterday's trading range. What if three becomes a big bear bar closing near its low? Well, I still would not sell. It might be a second leg trap. See if we. I'm just curious. I want to check if we tested the midpoint. Okay, so that bar did not test the midpoint, but bar one went to around the midpoint of the tight trading range. So you can see the limit order bears, they sold above here, they scaled in higher, they were able to make money. Had bar three been able to close on its high, it would have potentially trapped in limit order bears. Probably going to be a disappointing close. It'll be interesting if it's a bull or a bear close here. I know it obviously matters. It always matters if it's a bull or a bear close, but I don't think, regardless if it's a bull or a bear close, I don't think bears are going to be very eager to sell. Sorry if you just heard a noise. My cat's running around a lot right now. But anyways, there's a for the bears, it would be a micro double top 1-3 and neckline too low. If it is a bear close, it's obviously a bit more bearish, but either way, I still think it's not very high probability to sell. Are there going to be buyers below three? Probably somewhere below. But in general, traders don't want to buy below a bull bar that's not closing above its midpoint. So while there are probably buyers below, you don't usually want to buy below a doji bar like this. You want to buy below, you know, I don't know, better looking bull bars. I don't limit order trade, so I'm not perfect at picking out examples, but probably stuff like this a little bit better. The context for this is better, but you can see the bar is a little better, but I don't know, stuff below 63, things like that. Some traders will buy for scalps. They'll scale in lower. So, I think for limit order trading, traders buy below 21, you can see. So for limit order trading, traders usually want to buy below bull bars with relatively reasonable closes, above their midpoints. They're less likely to buy below bull bars that have giant tails on them like this. So what if five is a bull bar closing near its high, a good looking bull reversal bar? I still would not buy it. I'm probably just going to wait. Or sorry, it's four. Probably just going to wait. It's a lower low double bottom with two. If four is an outside up bar, then that could be a credible swing trade. But I don't really want to buy a small bull bar here. I look for surprises on the open a lot. So why if it's an outside up bar? Because that would be surprising. It probably is not going to be. So if it did become that, that would be more bullish than this would be more bullish than it initially appeared. Had bar three closed on its high, that would be a bull surprise. So it would be a little bit more bullish than initially appeared. So something to think about is surprises on the open, and when you get them, they can lead to swing trades. Even surprising patterns. We had an OO on the open. I think 3 or 4 weeks ago we had an OO on the open, and I thought it was pretty unusual. We don't usually see OOs on the open, and so when I got it, I just decided to take the pattern or trade the pattern because it was just unusual, and you don't normally see that. So I viewed it as a little bit surprising, and the bars were good, the context was reasonable, so and it did lead to a swing trade. So what are we getting here? Well, kind of just a disappointing bar for everybody. We're obviously channeling down, but all four of these bars, assuming that bar four closes relatively similar to how it is now, obviously things can change, but assuming it becomes basically what it is in some sort of doji bar, we basically have four doji bars in the open. One is not, one is not really a doji bar, and two is not really a doji bar, but they're functioning the same way. We have tight trading range behavior on the open, which is fairly common. So For me, I'm not going to do anything. I want to wait until we get a little bit lower and then get a surprise up or a good looking reversal up, or we get a little bit higher and then get a good looking reversal down. I'm a little bit more looking to buy right now because we are going down. And since we're going down, reversals on the open are common. And I want to buy from somewhere in this range. I think we might have to go down here. Like I mentioned, this could be the bottom of this trading range. So I want to get a reversal up from down here. So four, possibly two legs down, one, two, and then pull back three, second leg down, four. So maybe bull surprise on five would be helpful for the bulls, but probably sellers not too far above four. So it's kind of a similar situation to two in that if you get a bull surprise here, it's a little bit more credible. I think that there's probably sellers not too far above four, but it is a second reversal up for the bulls. So the first reversal up was above two. Now we have a second reversal up above four if we do trade above four. And even if, let's say, five turns into a bear bar here, let's say it closes somewhere down here, the bear bar closing down here, this tail is still going to exist. So even if five is a bear bar closing somewhere down here, it'll overlap four so much that it probably will not be worth selling. And it'll probably be an area of, it might end up being a bull bear trap if we get that, because you're going to be in the buy zone around the 39.25 low if we get there. What if five is a bull surprise closing your high? Yeah, you can buy that. Looking for either there's one of two things you want to see here. You either want to see a bull surprise. This is assuming you're looking to buy, which obviously, as I've mentioned, I am. If you either want to see us, some sort of controlled sell off into the 25.39 area, and then a reversal up from down there, or you want to see a bull surprise on bar five, a bull bar closing near its high, and that would be a credible buy for the opening swing. So what qualifies as a surprise? I probably want it to get it, to get around the moving average. Maybe if it could close a little bit above the moving average, that would be great. I would probably take that. And if you're taking it, your premise is that we've seen the low of the day. So it's pretty, so we're starting to get it. So like I said, your premise would be we've seen the low of the day. It's not the highest probability trade, but it's definitely going to be reasonable. And again, it's not, I don't think it's, let's say five is a perfect bar closing above the moving average. I still think three yesterday, had it closed on its high, would be a better trade than five today if it closes on its high. So, what about the bears, right? There's probably sellers before. So the bears, they sold before, they scaled in a point higher. You can see they just made money. The bears are hoping that these are just pullbacks and that we're going to end up getting at least another leg down. They see the two legs down and the high two for the bulls, but they also know that four isn't a good buy signal bar. So they're trying to prevent bar five from closing on its high. They're doing a good job right now. I think, yeah, like I said, I think for the bulls, five is a lot better if it closes a tick or two above the moving average. So if it closes probably a tick or two higher than its current high, that would be optimal. Even if this is a bear bar, though, let's say it's an outside down bear bar, it's very possible it becomes that. It's looking like it might. Even if this is an outside down bear bar, it's still really hard to want to sell. This is not good bear price action. The bears need to do a lot more. It's a bull bar closing above its midpoint. The bulls will probably buy below if we do get below. I think that the bears really want to see this close, close way, down here. I mean, obviously as low as it possibly can, but they're really trying to prevent the bulls from getting a strong close here. So always have to be ready to trade. If it closes on its high and it doesn't get any larger than this, you can still take it. I probably still will. Not that convinced it's going to close on a tie though. Okay, so it's getting stronger. I am ready to buy if it closes on its high, but yeah, not able to. So disappointing bar. So I don't think any credible stop orders so far today. So what is this, right? So for the Bulls, they're hoping that the reversal above, they're hoping that five is a big enough surprise to get at least another leg sideways to up. They want the Bears, who sold above four and are willing to scale in, to feel trapped. But I think if I was a Bear and I sold above four, I wouldn't feel all that trapped yet. So not really that great. If six is a bull bar closing near its high, second consecutive bull bar, that would be a credible buy. The Bears are hoping that six is probably an inside bear bar closing near its low. That would be a credible swing sell, but the problem would be a third leg down. Even if it is an inside bear bar closing near its low, I am not going to sell it. I would just rather wait. Not getting a lot of good signal bars on the open so far for the past couple of days. So sometimes the market will do that. So a lot of, you can't necessarily be expecting a good signal bar today on the open either. See, not a lot of traders eager to buy above bar five. It's a huge tail. So it would be better for the Bulls if six can be a bull bar closing near its high. Looks something like 79 yesterday. This would be like basically what you want to see. But I don't know if they're going to get it. It's just a trading range open. Again, it's just like I mentioned, we were looking for the bottom of the trading range. I thought it might be down here. It could just be here. We don't know. But this ultimately 54 yesterday through bar four today. This all looks like a bear leg in a trading range. And what usually follows a bear leg in a trading range? A bull leg in a trading range. So to me, this is, it's a little bit more likely that we're going to go up right now than it is that we're going to go down, but it's not all that great for anybody. And my main thinking for that is that we just had a bull leg or bear leg in a trading range, so I think we're probably going to end up having a bull leg in a trading range pretty soon. So what if six can close on its high? That would be, I might take that. I would probably want it to get a little bit larger, but it's still going to be credible. Again, it's okay to be aggressive on the open with swing trades because, well, I say that you have to be careful but aggressive because on the open you're usually going to get some sort of volatile move. 90% of days or 90% of opens have a swing trade that is at least 40% of an average day's range. Like I said, even if this is a bear bar, if it is a bear bar closing near its low, the bears want some sort of double top, 3-6, maybe 1-6 neckline here, regardless. And they're hoping that we get a big swing down. It would be a low probability trade, though. I would rather not take it. What if this becomes an outside bar? If this became an outside down bar, I would be looking for an outside up bar to follow that. So what if this is just a pause bar, right? Let's say that this is a bull doji bar, and then the next bar is a big bull bar. Well, that would be good for the bulls, but the pause bar would mean that you're gonna have to sit through a pullback. So again, your job on the open, I think for the opening 18 bars, is to determine credible lows and highs of the day. and try and structure trades around the possibility of a low or a high of the day. We have a couple of reversals down from the moving average: 1, 3, 6. So I think 5 is probably going to get a second leg sideways to up. And I'm not really that interested in selling 6, even if it closes on its low. So bear bar closing pretty near its low. What do the bears want? Just give me a second here. Bears want a surprise down on 7. They want the big bear bar closing near its low. So it looks like they might get it. But something to think about is we're really early in this bar, and it's already 5 points. We're only 30 seconds into the bar. So there's, 10 times that amount of time left. So do you really think that bar 7 moving down 5 points that quickly is going to stay in that area? Probably not. It's probably going to get bought up. So what if 8 or 7, let's say, turns into some sort of good looking bull bar? You could take that as a credible low of the day. The bulls see a wedge 2, 5, 7, and the bears are hoping to get basically a breakout below their double top and a measured move down. We might have support around the bar, like I mentioned, the 39 low, the 25 low, but it's a credible high of the day if 7 is able to close reasonably strong for the bears. So if 7 can close on its low, let's say it stays this size, and it can close on its low. If it grows bigger, obviously it's still a credible high of the day, but it's harder to structure a trade around that because your risk reward is not that good. So it'll be interesting to see what 7 does. Again, if it becomes a good looking bull bar, maybe an outside up bar is possible. That would be a credible buy. But I don't really want to sell below 6. And this is why, right? If a lot of traders sold below 6 were really quick and scalped out. And if you did sell below 6 and you're sitting in your trade right now, you're probably feeling a little bit, a small sense of panic in that your trade is quickly going against you. It went quickly your way, but now it's quickly turning up against you, and you're probably not too sure what to do. And that's kind of the problem with these trades, these types of trades. So it's okay to just sit in the trade and let yourself get stopped out. I think a stop above 6 is probably fine. There's no real reason for it to be above 1. If we trade above 6, your premise if you sold 6 is that we've seen the high of the day, but since we traded down so much on bar 7, if this is the high of the day, we're not going to go above 6. So I think a stop above 6 is fine. What if 7 closes around its midpoint? Well, I think that would be that'd be kind of interesting. If we get a bull bar, if 7 closes around its midpoint, some bears will sell, citing follow through, and they want another big follow. They want another follow through bar, but they want it to be bigger and more dramatic. However, sometimes what'll happen is the bears will buy back shorts in that area, and you get a bull bar closing near its high. You could buy that. So 7 here, if you sold 6, now 7 is right around your entry price. Sometimes what'll happen is the bears will sell more. So the bears, they sold 6 and they're selling, trying to keep this a bear bar and keep it closing relatively, trying to get it to close relatively near its low. But again, it doesn't look like it's going to happen. I think the wedge 2, 4, and 7 is a little bit more credible here. So I don't think 7 is going to turn into a good looking bull bar, but if it does, you can definitely take the buy. It can happen pretty quickly though, so you do have to kind of keep your eye on it. But looks more like it's going to be some sort of bear bar. Sorry, that was loud. So again, if 7 is some sort of bear bar, let's say it looks like this or closes its midpoint, whatever. Sometimes what will happen is, again, the bears will buy back shorts and you'll get a full surprise on 8. So if we do get a bear bar closing around its midpoint and then we get a bull bar closing near its high, that would be a credible buy. It's like I said, 90% of days have an opening swing trade for 40% of an average day's range in, the opening general range. And 6 could be that swing trade. However, I don't think it's very high probability, and therefore I do not want to take it. So if you're looking to buy above 7, you're looking for a bull bar, you're looking for something to make the bears think they're wrong and buy back shorts. Doesn't look like it's going to happen. So let's see what we get here. Again, it can happen pretty quickly where these turn into bull bars. So you do have to be ready. until the end of the bar. But nothing to do, it looks like. Okay, so what about the bears who sold below 6? Some of them will stay short, and they want 8 to look like bar 77 yesterday. So basically, the question right now is on the close of bar 7, are the bears going to sell more and create a bar that looks like 77 yesterday? Or are they going to buy back shorts and we're going to get the opposite of that and a big bull bar here that looks maybe like bar 40 yesterday or 33? If we get the bull bar, that would be a credible buy. If we get the bear bar, that would probably be a credible sell. I think the bull bar is a bit of a better trade, but it's okay to be short right now. We are probably always in short, but it's not that strong. So any sort of good looking bull bar here is going to be a credible buy because you're just the thing to look for on the open a lot. Okay, so it looks like the bears might end up selling, but if this becomes an inside bull bar closing near high, you can still buy. Uh, the thing to look for in the open a lot is thinking about looking for stop order trades that aren't really that great, and then watching those traders get trapped and then trading the reversals for those traders get trapped. There's nothing wrong with selling below 6. You can do it. But I think that a lot of times those traders will end up getting trapped in some way or have to exit and look for the area. So we're on the sell below 6, definitely. But a lot of traders, well, what I do personally is I like to look for if those traders get trapped or where they would have to exit. So if 8's a bull bar closing near its high, if you sold below 6, you're going to have to get out below 8, above 8 if it closes near its high. And you can see it doesn't look like it's going to happen, but I like to look for those traders to get trapped. So this is becoming a big bear bar. It looks like the bears were selling more. But I still think that there's an issue in that this has been a long bear leg in a trading range from bar 54 to bar 8 today so far, I guess. And I'm not really it doesn't look that strong. It doesn't look like it's becoming a bear trend. The bears can make it become a bear trend if they can get good looking bear bars closing near their lows here. But this is the issue, right? Look what we're doing here. So what happened? Well, the bears who sold below 6, a lot of them didn't like 7. And they were able to make 5 points. And so they said, all right, cool. I'll take my 5 points. I'll be done with this trade. I wonder how close they got on bar 7. Okay, so they got within a few ticks. So you can see here, this is where their target was. And basically they bought back their shorts in that area. So if this can close on its high, it's probably going to be a credible swing buy. If it's an outside up bar, it's still a credible swing buy for a possible low of the day. But I've been saying a lot the past few days, if XYZ can close on its high or its low, then it's credible, and it doesn't seem to end up happening. So okay, so we have an outside up bar. This closes on its high. I am going to take the buy as a possible low of the day. It's still a wedge. It's just it wasn't 247. It's 248. Or you could argue 247 was the wedge and 8 is a failed breakout below the wedge and we're getting a reversal back up. So again, looking for this to close on its high. If it does, I'm going to take a chance that the daily range probably triples to the upside. So you can see, right? If you were short below 6, now you see this and you're thinking, oh gosh, I think I'm screwed. And that's exactly what you're hoping. That's exactly what I look for is for some sort of average stop order trade on the open. It's not bad to sell below 6. It's not wrong. It's just, it's not ideal. So I look for those kind of trades and I try to find areas where those traders get trapped. And if you can do that effectively, you're probably going to start doing a lot better. So again, it doesn't seem like it's going to close on its high. It seems like we're just going to stay in this trading range. Yeah. So disappointment again. The Bulls, it's an outside up bar. They're hoping that we can get a bull bar closing near its high. And the Bears, well, if you sold below 6, you now have probably a glimmer of hope in that maybe the Bulls are disappointed here and they just sell it to their longs and we get a big bear bar. I think it's still possible that 8 is the low of the day, but pretty disappointing, I think, that we were not able to get 8 to close on its high. So let's see what we get on bar 9. Maybe we get an IOI pattern. If bar 9 is an inside bull bar closing near its high, I'm going to be willing to buy. The inside bear bar closing near its low, I'm probably not selling. Again, it's possible we're just trying to make it down to the 39.25 low, that double bottom, and test that area because that is probably the bottom of this trading range. But I'm willing to buy if we can get any sort of bull bar. You can see it's possible that we get a decent looking bear bar here because the Bulls might exit their longs. They were hoping 8 was going to close on its high, and the Bulls who were front running that buy, causing the huge tail to start. Remember, initially 8 was a big bear bar. Then the Bulls bought it up. So the traders who were causing that might just scalp out of their long. Are we always in short, always in long? I'm a little more bullish right now. We might be always in short. There's no. We were probably always in short bar 1 and 2. I don't think we ever really clearly flipped to always in long, but 8 is a big reversal up. But I think the point you should take away from that is that I'm having a really hard time deciphering the always in position, and you probably are too. Everyone is, and I think that is the hallmark of a trading range when you can't really figure out what is what. And I think looking back, going back even further on this, like the traders getting trapped thing, I think that bar 8 had it close on its high, flips the market to always in long. And so when you want to trade always in flips, that's a big piece. That's 90% of swing trading is learning where the always in is flipping and how to trade it. So if 9 can close on its high, it's a credible swing trade, and we might be always in long, but it's not going to be as good as if 8 had closed on its high. But it'll still be an IOI pattern and a credible buy setup. So most likely here, nothing to do. If 9 is an inside bar closing here, it's low. We're still on the sell below 6. So you're still on the swing trade. And it's okay to be short. I think it's better for the Bears that 8 was not able to close on its high, and that increases the chances that they're going to get their swing down. But you notice we cannot get above the moving average. We keep failing at the moving average. So we might try to go down, but I just not really all that bearish, to be honest. This whole thing just looks like a leg in a trading range to me. So that's why I'm having trouble wanting to sell. So it's an IOI pattern, 789. What do the Bears want? Well, the Bears want a strong breakout bar below bar 9. They want what they've wanted for a while, is any sort of strong breakout bar closing near its low. If we go below 9 and the Bears get trapped in and we get an outside up bull bar, I think that would be a good buy. If 10 is a big bull bar closing near its high above the moving average, I think that would be okay as well. If we don't go below 9, that would be. But I do think we're going to go below 9. Well, we might. It's possible that the Bulls just buy the close of this bar, trying not to let it trigger, and manage not to not let it trigger. Sorry, I'm just checking some other stuff right now. All right. Anyways, so again, like I mentioned, I'm a little bit more bullish overall, and I want any sort of bull bar closing near its high. I'll be willing to buy. 10 can close on its high. I would buy. I would like to see it close. I wouldn't mind if it closed above the moving average. If it's an inside bar, it's still a credible trade. As you can tell, I'm a little bit more bullish, so just looking for a good bull bar to buy. But the market, has not provided one for me yet today. So what's going on here? I think some bulls about to close at 9, trying not to let the IOI trigger. It's still theoretically a buy above 9 since it is an IOI 7, 8, 9 breakout mode pattern. So some traders will take that, but it's probably better to just wait and see if 10 can close on a high. If 10 is an inside bar, consecutive inside bars, that's fine as well. But the real question for the bulls is the moving average. They're unable to get bars closing above the moving average so far today. So if 10 can close on its high above the moving average, that would be good for the bulls as well. If it doesn't close above the moving average, some traders might still be a little bit suspicious. I do think this is probably the last chance for the bulls. They've had a few chances. They had bar 5. If bar 5 had closed on its high, that would have been credible. If bar 8 had closed on its high, that would have been credible. Now, if bar 10 could close on its high, it'll be credible. So that is 3 separate chances the bulls have had. And if they fail a third time, I think a lot of traders are going to start to wonder if we are actually going to go to the downside. Because you can see the sell below 6, we're still technically on the sell. You could sell right now at the entry price of 6, essentially. So not really great if you sold below 6 4 bars later. However, I do think this is the last gasp for the bulls. They need a bull bar closing near its high here on bar 10. Otherwise, I'm not too sure that we're going to go up. We might end up going down. Again, this is a bear leg in a trading range. I'm pretty confident in that, but the bear leg in the trading range could get a breakout below. However, it's only going to get a breakout below if the bulls continuously fail, and they failed twice. So if they fail a third time, I think that increases the chances that we're going to go down. Even bar 3, if it had closed on its high, would have been okay. 5 would have been okay. 8 would have been okay. So if 10 cannot close on its high here, I think we might end up going down instead of up. So really important bar, and you can see the bulls don't look like they're winning the fight. It's becoming tempting to sell. But again, if the bulls get a bull bar closing near its high here, then I do think we're probably going up. But they do not seem to be able to get that. It's a little bit tempting to sell at the market around the 6 low, so like right now, and just put a stop above 6. Take a chance we go lower. So I did just do that, but it looks like this is going to close on its high. I'm just going to get out. So 10, do you buy above 10? Yeah, I think you can. Um, you can also just wait for 11, but it is credible. I'm going to do it. I'm going to buy. Close enough. But I need 11 to close above the moving average. I lost like $1 on that short, or like $5. It was just pretty impulsive, but happens sometimes. So I don't know if 10 was the best trade, but it was pretty close. And if 11 can close on its high, then it's okay. So if you're going to buy, it's a swing trade, and your stop's below the low of the day, taking a chance we've seen the low. So far, the follow through is not very good. Let's go to my other screen for a minute. So is this a Walmart trade? Yes and no. If 11 is a bear bar closing near its low, then you just get out. It's not worth staying in, especially if it goes upside down. Um, so there's probably not a need to take a full loss and just obey your stop if 11's a bear bar closing near its low. And granted, I would want it to be a bigger bear bar than this. If 11 closes like this, I'll probably just stay long. But it's a swing trade. So yeah, now I would get out below 11 if it closes on its low. We're only 2 minutes into the bar, so it's possible this becomes a big bear bar closing near its low, and we break out below the three lows, so the two low, the four low, and the seven low. So you can see the bulls who took the buy above 11 are now trapped. Above 10, sorry. So there's still 2 minutes left in 11. It might get bought up. But I think at this point, probably just keep your stop. What if 11 closes on its low? I think that would be an incredible sell. 10 may have been one of those, probably was one of those average, not great stop orders. Um, so it's possible that I just took that kind of trade and now I'm the one getting trapped. But it was probably still okay as a possible low of the day. What if it closes like this? There's probably nothing to do. Just stay in the trade. You can see it's a tight trading range open, so there's not really a huge rush to do anything. You know, whenever you get a tight trading range like this, it's probably okay to be short or long and just taking a chance that we've seen that low or high of the day. You remember there's a 90% chance of a swing trade in the opening range. So some traders you can buy at the market, put a stop below here. You can sell at the market, put a stop above here. Either of those is probably fine. So if this bar, if 11 gets bought up and has a bull close, that would be really important. That would be really, really disappointing for the bears. You can see if you bought above 10, your stop has to be below the low of the day. You cannot buy above 10 and have a stop below 9 for this reason. In a trading range, the market will often go below the second lowest support zone and not the lowest one. So I do think, for what it's worth, I think the Bears had a couple of chances as well. 6, they had a chance on 7 to go down. They had a chance during 8 to go down. And they had a good chance here with the bear bar closing near its low to trap traders in, and they were not able to. So the question becomes, the bulls who bought above 10, how do they feel about their trade on 11? Well, obviously, it's not ideal, but 12 is going to be an important bar. If 12 becomes a big bull bar closing near its high, shows that the bulls who bought above 10 were fine with their trade and they're willing to hold. If instead 12 becomes a big bear bar closing near its low, it shows that the bulls who bought above 10 sold out of their longs and they just wanted to get out around break even. So it's an important bar. And additionally, this has to go above the moving average if you're a bull. This has to be a bull bar closing above the moving average. I really, really dislike that. I lost like $3. I was in the trade for, I think I'll check. I lost $5. I was in the trade for all of 2 seconds when I bought above 9. Or sorry, I sold the market as 10 was rallying, um, taking a chance that it wouldn't end up closing as high. But there's no need for me to be trading on limit orders. There just really isn't. The problem with limit orders is that you win. That's the problem with trading. It's kind of ironic, but the main reason trading is hard is because you win and you do dumb things sometimes and you get rewarded for it. When you get rewarded for doing dumb things, you think you did a good thing and you didn't. And so then you keep doing that dumb thing. And then after a year or two, you start to realize it's dumb. And then you learn to stop doing it. But it's a huge, very long and grueling process. So what do you do now? Where's your stop, right? Well, for a bull, I'm talking from the bull perspective, obviously, since I am long. A stop below 8 is fine. I would probably wait to see if this closes on its high, and then you could put a stop below here. This bar is, very important for the bulls. You want to see the bears give up, so I'm looking for a give up bar. looking for the bears to say, okay, fine, this is going higher, and for the bar to kind of bounce pretty rapidly, but it doesn't seem to be doing that so far. So still might be more trading range behavior. So this is not great. I wanted to see this be this close above moving average. The bulls might be selling out of their longs here. We still have 2.5 minutes left in the bar, so there's nothing to do. This might become a bear bar closing near its low, though. Usually, if you're going to get the give up bar, if the bears, it's now. They would be giving up now ish. 2.5 minutes into the bar. So what's the math here, right? Well, we tried to get a breakout to the downside, and it looks like it's failing. Maybe we get a measured move up of this somewhere up here. Obviously, that's an aggressive profit target, but in theory, risk 7 points, trying to make 4 to 1, maybe, I don't know, 40% chance. Maybe we get into this gap from Monday, somewhere up here. Is that in the same area? I don't know. Not quite. So like I mentioned, my stop was below here when I took the trade, and it's still below here. But I think this bar 12 is extremely important. It needs to close above the moving average. It doesn't necessarily have to close on its high. It would be a lot better if it did, but I really do need it to close above the moving average. This is not what I wanted to see. I'm considering exiting. I'm not really. Yeah. So the bulls might be the ones giving up here. If we get a bull close, I'll probably just stay in. If we get a bear close, it might make more sense to just get out. So the last 20 seconds here are important. This can definitely still sell off and become a bear bar. It happens pretty quickly sometimes. I would like to see this close around the 10 high, so one tick higher than this, at least. All right, I mean, I'm not going to exit. I think, the math of my trade is pretty much at my entry price right now, so I could just get out and be flat on the day. But I still think we're going up overall. So not much to do. 13 could be the bear give up bar, but it's, bull's got a bull bar closing reasonably near its high on 10. So to me, I'm just thinking we're probably more always in long than we are always in short. But swing trades are often not all that clear in the beginning. So I'm still long. Bottom of 10, stop is still below 8. What if 13 becomes a big bear bar closing near its low? Then you just get out. I think a stop below 11 at this point is fine. We're not trading below 11 if this trade is going to work. I'm not moving it yet, but you can. So I really want to see the bears give up here and get a pretty good bull bar. But the alternative is we get a micro double top, 12-13, and a bear bar closing near its low here. I think any sort of bull close, second. I think any sort of bull close is probably fine. It would increase the chances that the Bears would give up. So maybe the Bears don't give up if they get 12. And well, they haven't given up yet. You can see it. But maybe if 13 looks like 12, then they see two consecutive bull bars and they know there's going to be buyers below. So they just exit their trade. And that causes a bounce. I think it's, what are the odds we've seen the low of the day? Maybe 50-50. Maybe a little more than 50-50. I think either one is the high of the day or 8 is the low of the day. And I'm taking a chance 8 is the low of the day. Because one of the reasons, again, like I mentioned, bear leg into trading range yesterday from 54 down to bar 8 and expecting at least a bull leg in a trading range here. I think there's going to be a big bar relatively soon. I don't know for which side, but either the bulls, like myself, who are long, are going to give up or get stopped out, and the bears, or the bears who are short, maybe below six, whatever, are going to give up and get stopped out. You can see the bears who sold below six are probably fighting right now to try and get a bear bar closing near its low here to increase the chances that they get a swing down. But reasonable to be long. I would not be short at this point. I suppose if you sold below six and you went and took a walk, I mean, you could do that, but you're probably not going to come back from your walk and be happy very often. If we do get a give up bar here, I'm hoping we do, and if we do get some sort of give up bar, I'll probably just leave the market alone for a little bit. So we might get it here. This is the last time I'm going to harp on this, but the trade I lost $8.50 on the trade where I sold the market here and then exited quickly again, which is very, very, very small, but I don't like when I take trades. I just got impatient because yesterday there wasn't a swing trade on the open that I liked, and the prior day there wasn't. And I ended up getting impatient, and impatience, I was really frustrated because then 10 closed on its high, and that was the trade that I wanted. So I just took that instead. And I was thinking to myself, why did I do that? But the thing is, if you're really patient, it's not going to be great sometimes. Sometimes you're going to sit through a lot of stuff, but then at the end of the day, or not the end of the trading day, but you're eventually going to get the trade that you want and you're going to be able to take it and you'll probably make money because it's probably a good trade. And if you just miss all the bad trades, you'll miss a couple of good trades too. But once you get your setup, you can say, oh, okay, great. So I was flat on these past couple of days because I didn't get the setups that I wanted, and now I'm getting it. So rather than having massive losses you're trying to make up, you have a reasonable, um, you have basically no losses and increased chance of winning. So I did do a couple things yesterday, but I basically ended up flat. I sold below 24 and I just exited in here. I was hoping we would, go down pretty quickly and close this gap, but obviously it didn't happen. I don't like this, by the way. I would like to see a bull close here. I was really hoping 13 was going to close on its high. So, okay, so it looks like bulls are giving up. So it's going to be reasonable to be short below 13. I did sell, so I'm now short, stop above 13. Maybe I'm just going to get trapped in. It's a tight trading range, actually. I'm just going to exit. So I exited basically flat there. But I think it makes sense to get out of your long below 13. That's not what you wanted to see. – 13 was an outside bar. So if 14 also becomes an outside bar, it could be an outside pattern. So if it is an OO, I'll just buy back. I did for a second, short below 13, but then just exited because it's just a tight trading range. So we've consistently been failing at the moving average. So I was hoping that, or I was thinking that with 13, that was the bulls giving up. 60% of the time on the open, though, the market does something to try to trap you out of the winning swing trade, and 10 may have been the winning swing trade, and 13 is trying to trap traders out. And 13, is probably not the most unreasonable stop order trade. So it's possible that those traders get trapped in. So I'm gonna wait. I'm just gonna wait, see what we get. If 14 closes on side, you can see we're forming a triangle, right? So if 14 can close on its high, I'm probably just gonna buy back my long. But I thought 13 might be the give up bar for the bulls. So if 14 does close on its high, I'm gonna buy and probably turn the screen off for a little bit. Go do something else. Just let the market do what it's gonna do. It's still probably reasonable to be long for a swing. But there's really not a rush though to do anything because the reality is the daily range is really small. 12, 13 points. It's going to double, probably triple. Unless this is one of those days, you get them like once a month where the market's just a tight trading range all day and it's horrendous for stop order traders. But, those are pretty unusual days. So yet again, the bulls cannot get a close above the moving average. So what do you do? Probably nothing. I think we're at the apex of a triangle. I'm a little more bearish now, to be honest. And the Bulls have had a lot of opportunities, and they do not seem to be capitalizing on any of them. I think it's okay to be short for a swing. All right. I'm going to sell. I'm going to get short for a swing and probably just walk away for a little bit. I think I will probably get stopped out, which is fine if I do. But the Bulls cannot get a close above the moving average. So, and 6 was a credible swing sell. So I think you can sell, stop above 13. Your risk isn't all that large. But I don't want to keep reversing. These kind of ranges are tough to trade. So I might just be trading too much in a tight trading range. So I'm going to be done for a little bit, regardless of what happens here, and just wait for more information. Like I mentioned, my stop. I'm looking for a bull give up bar now, right? So my stop is above 13, and pretty large profit target, probably somewhere down here. I didn't lose very much on this trade, and the other trades I took pretty much just did nothing. So I have basically a small loss on the day right now. But most swing trades are small wins, small losses. But yeah, I think the Bulls have had enough chances. I was more bullish, but I just thought if we were going to go up, we probably would have done it by now. So, all right, I'm going to pause the screen for a little while. There's probably something to be said for taking a piece off at 10 points here, but the daily range is so small that I don't think I'm going to. Again, it might do this where it just reverses back up reverses back up because this was a tight trading range. But we haven't been able to get above the moving average yet today. We should get at least a measured move down. And I think the opening swing, it looks like it's going to be down. So I think the bears who sell below 6 should be able to make 20 points if that's the case. So I think we might have to go somewhere down here. So 15, a good looking bar for the bears. It's possible 16 just reverses and erases all my profit. And if it does, that's fine. I'll just get out around break even. But I'm not really too sure that that's going to happen. So my plan right now, I was down probably the equivalent of like a couple of points, 4 or 5 points on the day, and I'm trying to make 20 right now on 13, and I already have 8 or 9. So um, I think that I will take probably half off if we get to 20 points. And if 16 is a bull bar closing near its high, then I'll just get out. But you can see. Let me just set something real quick. Sorry, I'm just setting something to take partial profits. You can see this might be more trading range price action where we're going to get big reversals, but I'm a swing trader. So my goal is to be a swing trader because that is the easiest way to become a profitable trader. So I always try to be a swing trader. So yeah, I'm going to get, yesterday, I was saying yesterday, I sold below 24 and just exited during 26, 27. And then I sold below 38 and exited above 40. So I had a very small loss yesterday, which is fine. I don't mind. But had I sold below 24 and scalped with 5 points, sold below 40 and scalped with 39, 38, sorry, and scalped with 5 points, those would have been reasonable things to do as well because of the trading range price action. However, scalping it's difficult. It's not an easy thing to do. And for me personally, I just try not to do it because I'll end up overcomplicating things. And so simple is just a lot better. And even in here, I was overcomplicating things a little bit with the silly limit order trade that I took. And again, it didn't cost me anything, but still, I just don't like when I do things like that. It's very frustrating, for myself and my mentality when I do that, and then my swing trade, the trade I want, comes immediately after, and I'm thinking to myself, why did I? There was no reason for me to do that, even if it didn't cost me money, because if you keep doing that stuff, it will cost you money eventually. So for me, yeah, this might be trading range price action, and this might reverse on me. Traders might convert this into a scalp. Sometimes 16 will be basically like a bear doji bar, and then traders will buy back shorts, and 17 will become a big bull bar. But if that happens, I'll just exit. I'm happy. I'm okay with giving back most of my profits. Not a problem. It's interesting. 20 points below bar 13, so the low 56.36. So it would have to get to 15.5, so 56.15.5 for those bears to make 20 points. If you look, that area is right around this bar 2 close and where the reversal started. So it's possible this whole thing is a trading range and this is the bottom of it. But again, for me, there's nothing to do. Yes, ideally 16 would become a bigger bear bar and close near its low. This might be more of a trading range, but that's okay. 16 is a bull bar. I will just get out. It's possible the bulls didn't want to buy the moving average, so they gave up and they were going to start looking to buy since we're decently below the moving average now. That might happen. But for me, I'm just going to stay in my short. I find that I used to try to scalp auto trades a lot, and I'd find that I would always end up doing it in spots. Like right here, I would look and I'd say, "Oh my God, I have a big profit. I want to exit." But now I look at it and say, "Well, 15 and 16 are pretty big bear bars. We're probably going to end up going lower, and it's pretty early in the day. You don't know what the day is going to look like." I think the biggest advantage you have to trading the open is you don't know what the day is going to look like. So it's more okay to take a chance that the day ends up being something that you want it to be. So I have an order to take half off at 20 points. So 16, another bear bar. 17 sometimes is going to be a big bull bar. You can see we have a tail on 15 and an increasing tail on 16. So sometimes bears are going to buy back shorts on 17. I'm trying to check. So needs to go here for these bears who sold below 6, which is the opening swing, right? So 6 did end up being the opening swing. This is why it was okay to sell below 6 and just hold through the noise and take a chance. But the bears who did take the sell below 6, it needs to go here for them to make 20 points. I think they will probably make 20 points. But like I said, 15, 16 is a good looking breakout. So, or it's actually not that great looking of a breakout because the huge tail on 16 and there is a tail on 15, but the bars are pretty large. So we also have an open gap here with the 8 low and the 16 high. We have a smaller open gap with the 15 low and the 17 high, but I would like to see another bear bar before I consider that gap to be that open. So it was a tight trading range open, so we might end up getting back into the tight trading range at some point today. Definitely something to be said for exiting half now or exiting half or exiting all at 20 points, just betting that we're going to stay in the trading range. I think, for me, the way I was drawing this triangle, I think this is a breakout attempt of it, but 50-50 chance the first breakout attempt is going to fail. You have to keep that in mind. So if 17 closes on its high, I'm just going to get out. It's fine by me. Funny, but this more simple that you keep your trading, the better you're going to end up doing. So I'm going to pause the video for a minute and I'll get back with management whenever I end up doing something. So if we go above 17, then I'll just exit and I'll be a little bit better than even on the day. And that happens a lot, I think, when you're swing trading. Break even days are very common. Usually, small win, small loss, and then every little while you get a big win. That's what 90% of swing trading is. So, but yeah, if I exit above 17, when I exit above 17, if it trades above there, I'll be a little bit better than even on the day, and that's fine. So you can see the math is interesting because some bears are selling the close of 17, trying not to let it trigger, and hoping that we get a big climactic bear bar closing near its low, allowing those bears to make 20 points. It's possible that some bears, they're going to sell the close here. So they sell the close, they put a stop one tick above. So they're risking a little less than a point, and they're trying to get down here and make 3 or 4 points. Good risk reward. So that wouldn't be an unreasonable thing to do. I said we're probably going to trade above 17, just most likely, and we're probably going to close the gap with this. But do you buy above 17? I probably would not personally. If you do, you're taking a chance that the bears buy back shorts and we get a good looking bounce, but it's probably more of a scalp, I think. I don't think it has potential to lead to a huge swing trade. Seems like it's going to be a trading range day today. Kind of interesting to think about what the rest of the day might look like as of right now. So I'll be interested to see if the bears end up buying back shorts around the bar 16 close. You could definitely do that, but I'm not gonna. Again, I just like to keep my management as simple as possible. Not everything has to be, it's easy to hear Al talk about his trades, and it just sounds like he just sounds like a wizard. I mean, most of the time. I remember I bought a bunch of recordings of the trading room. The trading room's a great tool, by the way. It's like $100 a month, and you get to listen to Brad and Al talk real time. And I did that for about 2 years. It was really helpful. They talk about the market real time. And I remember Al talked about a couple scalps that he took, or he would, and none of it made any sense. I just could not understand how he was thinking the way he was thinking. And eventually, I heard Brad talk a lot, and I found Brad more useful than Al a lot of the times because Brad was a little bit more closer to my level than Al is. Because Al's hard to understand because he's so smart, and Brad's getting hard to understand. I think for a lot of beginners because he's so smart. And so, if you're learning how to paint, you don't want Da Vinci teaching you how to paint. You want somebody who's been painting for a couple of years to teach you how to paint, because somebody who's been painting for so long will have forgotten what it's like to be a beginner. So you need somebody who can still understand your mindset a little bit better. Uh, but point being, I think the trading room is a useful tool. But I would hear Al talk about all sorts of trades that he would take, and I would not understand anything that was going on. None of it made any sense, and I just kind of eventually got to the point where I decided, where Al would talk about, he'd say, well, you need, when you're starting out, just swing trade and keep everything simple. And so I eventually took that to heart, and so that's what I do. So bears want spike 15, 16, pullback 17. And they're hoping this is the start of a channel. It's very possible bears buy back shorts here around the 16 close, because 17 was a good enough bull bar that we might end up getting some sort of disappointing follow through. It's worth noting. I think I'm going to take a little bit more off at 20 points if I get it, because uh, I think that this big bull bar on, well, the tails on 15 and 16 and the good looking bull bar 17 make me think this is probably going to be more of a trading range. So if we do get a vacuum test down, I'll probably take like 75% of my position off instead of 50%. Okay, 18 went down pretty quickly there at the end, as you saw. It's possible that 19 becomes an outside up bar. My stop is still above. It's kind of the nice thing about this is you can just keep your stop above 17. And that's where my stop is. You don't really need to do anything else. So it gives you a logical place to put a stop and um, and reduce your risk. So that's why a lot of traders might take the sell below 18. Sometimes 19 is going to be an outside up bar. It looks like, I don't think that's going to be the case here. It's probably, if it is, it's going to start to form now. So we're going to start to bounce pretty quickly if it is going to be an outside up bar. But I think the most logical spot for a stop is above bar 17 right now. I think it's really the only spot for a stop. So bulls want failed breakup below the 18 bar range and a reversal back up into it. I think this is a trading range, but we're trying to find the bottom of the trading range, and it could be anywhere. I still think the bears who sold below 6 deserve to make. I use the word deserve a lot. Means probably, I suppose, in my mind. But I used to take, whenever I take a bad trade, I used to just, when I would lose, I would be like, well, I deserve that. So now I think of it as certain traders who take a bad trade deserve to lose, so they probably will. So that, I don't know why, just in my mind, if you're a bear, let's say you were selling below 15. Well, that's not a good trade. I think you probably deserve to lose that. In my mind, it just means these traders are probably going to lose money if you sold below here and put a stop above here. So that's how I think about management sometimes. If 16's sort of, if 17's sort of near its low as it's forming, I think I'm thinking, well, is a bear who sold below 15 and put a stop here, are they really going to make money? That would be pretty unusual. So that's how I think of that. So nothing to do. Sometimes I like to watch the inverse chart. It's just an inverted. It's negative backslash ES. I think it's only on Thinkorswim, but yeah, really just nothing to do here. Sitting in the trade. So getting stronger. It's pretty parabolic. Sometimes you get a small opening range and then a big breakout and a big trend day, but I don't know. We'll see if we end up getting one today. My order to exit, I'm exiting 3/4 of my position. I don't know if I need to exit 3/4. Here's the thing. I think it's right around here to exit, but the thing is, I think we're going to go past where my order is. I do think we're going to keep going lower, but the question you have to ask yourself is not is it going to go lower? It's is my exit. If you're planning on exiting 75% of your position the way that I am, I ask myself, do I think that we're going to go so much lower? Hold on, I might just exit at the market here. All right. I just exited 75% of my position. I'm going to hold on to the other 25 until we get a bull bar. Let me adjust some stuff. Though I exited, point or two above where I wanted to, but it's fine. Sometimes it gets close and like it gets within a couple cents of your exit order and the market starts to stall and it's just not worth staying in. So 75% of my position is I exited with roughly 20 points. And I lost probably the equivalent of 5 points in the opening range. So sometimes you have to take a couple of swing trades before you make money, but you usually will. So I don't like what this is doing. I might just get out of my whole trade here and just exit the last bit. I'm considering. I just got out. I wanted to see 19 close on its low. We're probably still going lower. I do think we're going lower. We have an open gap here. We might form another open gap here. And we don't have that open gap anymore. But my reasoning for exiting is we're getting big tails on 16 and a big tail on 19. So I'm really not, and 17 is too good of a bull bar. It's way better than it should have been. So I'm really not as bearish as I was. So for me, I think this is a trading range day. So what am I looking for the remainder of the day? Well, usually when I make money on the open or I have a good profit on the open, sometimes I'll just walk away for the day. And I'm considering doing that today. Like I said, I'm traveling over the next couple of days, so I don't really want to. I have things to do, so I might cut my trading short today. But in general, I'll look for some sort of midday reversal. I think that's what I'm going to do today. Is probably be mostly done. So I'll probably wrap the video up after this. I don't think there's any. I don't think I'm doing anything else within the next hour. So I'll probably just wrap the video up. But I wouldn't be surprised if we started to go sideways and then got some sort of reversal up around the middle of the day and we tried to close this gap. I think it's a trading range day, so we might have to close this gap. But anyways, I'm gonna end the video. But that's it. And a reminder to everybody that there's gonna be no videos tomorrow besides the second leg traps video. All right, thank you.